And hello, y'all. Once again, we're here. We're here on the Teddy and Monica show on Tab Nashville Gospel Radio, 104.1 FM, Tab Nashville Gospel Radio. Also live recording the Sacrificial Conversations podcast. We are so excited to be with you all again today. We having special person in the building with us today, y'all. Monica and us, we were talking yesterday, and we was like, baby, we've been getting some great information on this show lately. We've been able to help people with their finances. We've been able to help people mentally, Father. We've been able to get some people on there. We had some young rappers on there a couple of weeks ago that was amazing, and he was able to come in and talk about some of the things that they're doing. But God is really showing out, because we are getting some of the best information that on this planet right now. I really can say we've been blessed, babe. What you think?
I do, Theodore. And we want to say we missed you all last week. Unfortunately, our guest got sick, and so it was last minute things. But yes, today it's going to make up for it. So I hope you all are tuning in. Tell a friend to go ahead and log on, because they don't want to miss this treat. So we don't want to let the cat out the bag. But once again, it is going to be an awesome show. We don't want to, like I say, give away the topic. I guess we do.
No, I don't want to give it away yet, because I want to talk about something else before we get there. But what we're going to do first, we're going to introduce our guest today. This young lady, y'all, I've been knowing her for about 20-something years, you all. I was blessed to meet her at a church that we were attending together. We became friends. She became a customer. Her and my wife, they connected. I mean, we've been knowing each other for a long time.
Our children
went to school together. Yes. So, I mean, it's a lot that went on. And, y'all, I actually was able to do her wedding ceremony, and I was the officiant at her wedding ceremony, and it was a blessing for her to even ask me to do this. So, y'all, we have special ties with this young lady that we're talking to today, but we've been trying to get her on the show for a while. I'm going to let her introduce herself, and I don't want her to talk about what we're going to talk about yet. I ain't gonna say your name. I'm gonna let you say your name, and then when you say it, give us a little resume. Tell us what what you do. That way, then we can let the cat out the bag. But tell us about your family. What's going on with you, and just tell the people who you are today. Go ahead, young lady.
Thank you so much for having me here. Of course, it's a privilege and an honor anytime to share a platform like this. I don't take it lightly, so thank you. Yeah. My name is Monique Elam-Smith. I am an author. I'm a child of God. I'm a wife. I'm a mom. And my passion is to help people make their money work. My book is What's Up With My Money. One of my companies is Make Money Work. And I'm the agency owner for Farmers, Elam-Smith Agency. And I'm licensed in multiple states. Glad to be here. Thank you.
Wow.
Doing big things.
This girl come with a big resume. I wanted to make sure y'all heard her correct. Your book, the name of the book is what again, Monique?
What's Up With My Money?
What's Up With My Money?
So what inspired you? Yeah, that's my main thing, because I like that topic. That topic is catchy. So I'm like, that's something I need to read, because it's nothing like a dull topic. But I'm like, what's up with my money? Yeah, Monique, tell us what's up with my money.
So we go into everything from start to finish. So nesting, vesting, and even what careers to go into. So I wrote the book in the mindset of a high schooler that could either take it and apply it to themselves, or take it to their parents that maybe haven't introduced them to the things of finances. So we talk credit, we talk career, we talk to how to secure the bag and how to make the bag grow, thus making your money work for you.
Wow. All right. Okay. So what platforms is this book on?
So you can order it directly from me. I was on Amazon, but things are things. And in these tariff times, prices went up. So I realized I could I give the book away a lot, because it is that important for me to get the message out to specifically who I'm talking to. Mm-hmm. So if you email me, I'll probably just send it to you.
Oh, wow.
Sweet,
okay.
That is amazing. But when you were sitting down writing this book, or when you thought about trying to get together, because that's what I call myself gonna do like gonna do soon, but it's coming. I'm gonna stop procrastinating. I'm gonna do it. But when you sit down and thought about trying to get this book together, I mean, were you going through some financial problems yourself, or were you what were you going through to make you say, okay, I need to write a book about finances and people's money? What made you actually say, okay, this is the book I need to write?
So, my passion is showing people how to make their money work for them. So, my call literally in life is so that to take money completely off of the table. So, whatever it is that God has called someone to do, I want to do my part to make sure that money isn't the thing that keeps them from doing it. I truly believe there are so many unfulfilled dreams and tasks and purposes that are literally going to the wayside because of money. And it is my mission to, which is why I give that book away, to teach people how to take money off the table. Let's put this thing on autopilot. The money will be there if you follow these steps.
Wow.
Okay.
Wow.
Okay. I like that.
Yes, that was very, very well put together. Before we dive off into that too, I want to talk another little bit about Monique. I know you are married, okay, and we always want to throw a nugget in here for our married listeners out there. You all have been married now. How many years? You and your husband?
Almost, 3.
3. Okay,
Yes.
so give us some tips, and this is for our married people out there, because that's something we said we were going to do, every show. If we had a couple on here that was, or someone that was married, was going to let them give us a little tip on how you're actually being successful in your marriage. Give us a good tip real quick before we dive. Don't talk about the money. Give us a tip about marriage that you can give to the people before we get into this conversation about our money and our finances.
And Monique, I always tell my husband, and there's a lot of people out there that are together and they are inspiring to be married. So not only to married people, but the ones that want to be married, because your tip can help a young lady that's probably in a relationship that, can look for the signs of, hey, do I need to stay with this person, or do I need to move on? So speak from that aspect as well.
Glad to. So, excuse me. Me and my husband laugh hard to the point that we are coughing often. I truly believe we were friends before. Our story is 10 years old before we even got married. So when I say marry your best friend is a real thing, it really is, because you got to be able, listen, when the rain comes, because rain comes for everybody.
Absolutely.
Yes, it does.
When that rain comes, you and him better be able to look each other in the eye and laugh until you can't breathe, because some nights that's all we got.
That was good, Monique.
Yeah.
That was good. Laugh until you cannot breathe. I know we get some good old laugh-ins like that too,
Yeah,
as
'cause
well.
my husband is hilarious.
Hey, that's one thing
Oh,
that
my
we're gonna do.
goodness.
We're gonna laugh in this household. So, Monique, that was an excellent, excellent thing for our married people on today. But we come to talk about something very, very important.
Yes,
Very,
Money.
Yes, that and other things.
Yeah, other things, but
But,
that's the main thing I feel.
Yes. So, Monique, the reason I asked you to come on, she came into the salon, you all, one day, and she said, Teddy, and no, actually what happened, I looked on Facebook and I saw your post, Monique, and you was on there saying, I've been totally wrong. I put some stuff out there. Explain that a little bit, and then we'll dive off into our conversation for tonight, for when we really came. So, what was that actual post that you posted about that day?
So I was apologizing. Listen, I am big on knowledge, very big. And when I know it, I absolutely know it. But if I'm wrong about something, I'm gonna make sure I own up to that wrongness. So as I said, my journey with personal finance is more than 20 years old. My degree is in business finance. I specialize in business finance, graduated from TSU in 2001. And my first job as I was graduating was a bill collector. And Yeah, I had a 454 credit score and was collecting on people, literally helping people. I can admit it now because I'm assuming the statute of limitations is over, but I would help people hide their cars. If they gave me a good reason, usually if they were Christian, they were using their car to take people to and from church, I would put them to the back of my file because I felt wrong collecting, like literally collecting on them. When they were doing something for God with their money, right? So from there, that's how I got involved with, I don't know if I can say his name or not on this radio show, but I started following this very prominent personal finance person on the radio. And he used to talk very big about buy term and invest the difference. So that was my entry into the insurance world. I became a representative for this company that only sold term insurance. And at the time, I already had my degree in finance. So my head knowledge that I'd learned with the degree was, wait a minute, there needs to be something more. But I was a part of a company that only sold term insurance. So when people would come to me, I was very good at selling it too. I was wide and deep in this company. And I was passionate about life insurance. So of course, the only thing at that time that I could sell was term insurance, even though my heart was telling me these people need something else. And that is what I was apologizing for. The video, now it is, I am very clear at apologizing because, hey, I didn't know what I didn't know, but now that I do know, I am responsible to make sure that I go back and fix it for good.
So when you say go back and fix it, I mean, I don't want to get too, if we go too far, go too deep, say, Teddy, bring it back. But when you say fix it, what do you mean fix it? What, how do you say it that?
And one more thing, Monique, explain term, because I think people, because even my parents, I believe they had term, and if you can explain it, then I know if that's what they had. If that makes sense.
And Monique, actually break down all like whole life, term life, and break all that down for us. So, because we need to know. The people out there really need to know, because I feel like there's a lot of listeners out there that don't even understand the difference between term, whole, and the other one that we're going to talk about tonight. Okay, so explain all those to our listeners on tonight.
Okay. So term insurance, think term, temporary, time frame. Just like we have terms of, supposed to have terms in government. Things, things like that. There is a start and an end to it. So your term insurance is just that. It is widely sold because remember, my degree is in business finance. So I have the business knowledge of what the companies are doing, but I have the heart for the people of God and what you're trying to do, what we all are trying to do, right? So the business is selling term insurance because the actuarial list understand the likelihood of a person dying in that term, in that time period, is slim to none. The facts are less than 3% of all term policies sold ever have to pay out a death benefit because they've done a great job at making sure they insure people that are very unlikely to die during that term period. So usually it's 5 years, 10 years, 15 years, 20, 30. 30 is the longest. So term is sold needs to be sold for something that has an expiration date. Think if you are a parent who signed the loan that parents get. I forget the name of it, but that one, Stafford. Anyway, the loans that parents get. So your student is going to get out of school one day and then be able to start helping you pay it back. So you don't want you want to put a term policy on something that's going to end, a mortgage, your children's or your own student loan. You want to have something that if something unfortunate happens to the person that you've been paying this money out for, you're able to pay that off and you're not stuck grieving and holding a bag. Same thing with a mortgage. Something unfortunate happens. It's two of you that are paying this mortgage. Well, two of you were paying it. So if one of those incomes goes away, you're going to need to be able to pay that off, because if you could have paid it by yourself, you would have had it in your name by yourself. That's term. Then cash value. So when people say cash value, they're talking whole life insurance. What they are referring to in that cash value portion of the whole life insurance is the amount that you can either borrow against. You can, once you are, say, okay, I'm done paying this. Either it can be used to pay up the policy for a certain amount. It's called a reduced paid up. Or it can be once you are done paying it and you just want the cash value out. So a portion of the money that you've been paying in every month, say you're paying in $100 a month, say 20 of it is for the life insurance portion and 80 of it is going towards that cash value. That's just an example. So that cash value, that money that's going in there is being invested into sub accounts that, again, the insurance company has done all the math. They know what's going to be safe, what's going to give this amount of return, and then they guarantee you, say, 5% or 7% of that growth.
So that's with whole, am I correct?
That is whole life, yes.
Okay.
And
so
I was just breaking down the cash value.
The cash value piece of whole life. Gotcha. So I really wanted to make sure that people understand tonight, Monique, because I don't want to go too fast. Because listen, when we talk about these type of things, you all, what we have term, we have whole. No, we have whole. Okay, and when she brought that to me, you have to understand that a lot of us don't even know that a life insurance policy even has a cash value to it. You know what I'm saying? They don't even know how to go in and use it or get, or even dive into it or get anything from that. So term, you say you cannot, it doesn't have a cash value at all.
It does not. And I see you're about to ask a question, but Monica, so give me just a second. What you're touching on is a lot of the issue of term insurance. People have paid in, all of this money for all of these years, and then they get to the end of it, and of course, they likely are still living, and they have nothing. Meaning, if they are called home one day after that term ends, their family does not get a dime.
So you have explained it. So that's what my parents had, but they never knew that's what that was.
There we go.
And they usually never know.
So now they are in their 70s, late 70s.
Yeah.
And they paid all, when I'm telling you, because that I'm from the family where they make sure everything is paid on time ever since I was a child. And come to find out it was term, and they never ever knew that.
And in this same token, part of where that apology is coming from my heart, is that while there is always another side to a story, while there's always more, we have to be careful as financial professionals and as consumers. Financial professionals need to be forthcoming with, there is another thing out there. I can't sell it. These are for people that can't sell it, right? I can't sell it, but don't pretend this doesn't exist. You know what I'm saying? We have to be responsible to sell what is right for our customer, because this is who's going to need it at the end of the day, right? Now, as consumers, remember, I had the finance degree. Did not know about this other insurance that we're going to talk about later today. Didn't know it existed. As a consumer, do your homework. Like, don't just accept, and don't get me wrong, I literally still to this day have 2 years left on a 30-year term policy. I was a single mother with a 7-year-old then. Guess what's about to expire? It's got a lot of money that I paid into it. It would have had a death benefit, Lord willing, I'm still here in 2 years. But at the end of that 2 years, that policy is done. And that's it.
Man.
Done. So what I'm saying is, even with a finance degree, even selling term insurance, I didn't go further and be like, wait a minute, what else besides buy term and invest? The differences out there. So we got to be educated. And that's what I hopefully people do with this today.
So, quick question. So, term and whole, is there a price difference? Do you think a lot of people go to term because is cheaper and whole life is more expensive?
Absolutely. So remember, I was
Good
saying
question.
a piece of that, say you're paying in $100, 80 of it's going to the cash, and it's not. It's you pretty much reverse depending on their age, right? 80 of it's going to cash value, 20 of it's going to that death benefit, or the reverse. 20 of it's going to that cash value. So, of course, $20 isn't going to make a lot of money, right? But that death benefit could be so large. That's where you're talking about like those $1 million policies. So the premiums for a term policy, because again, they know the likelihood of the insured dying in that time frame is very literally 97% ain't gonna happen. 97%.
So I got one more throw at you. So when T and Trendy were little, I did take out a policy. So it's just us three because he's a diabetic. So if I'm not mistaken, which is it's something like you said, I haven't done my homework. Well, they are both up in age now. So I'm thinking like, oh my, is it still legit? Does that make sense? Because I got when they were smaller, and I for some reason I'm thinking it's a clause in there saying when they reach a certain age, it's it's gonna do something. I haven't and then when I called to the insurance company, they're no help.
Wow.
They told me to read the policy myself.
Exactly. It could be difficult. So for
Oh my goodness.
for that, send it to me. Like today, you can send this to me. But send it to me, look over it, and I can comb it for you. So this is where the partnership comes in. While your insurance professional, financial services professional is, of course, in the business to make money, they also have to be in the business about their business, protecting their customer or their future customer. And who you work with matters. By the way, I'm hiring, but I have even helped people pass their license that we're not even coming to work for my company, because it is that important that we get this right, because y'all, this is the meal ticket. This is it. This that we're going to go further into. This is how we pass generational wealth. I literally call it, this is the lottery that is going to pay off. Every one of us is going to leave this earth one day. Why not guarantee that your family is going to benefit and benefit big when you do? You know it's going to happen. Set them up.
Very, very good. Look, it made me and you say, So one thing that we know we have to do, we're going to definitely do our homework. That's one thing I got to get out there, y'all. Our community, we don't do homework when it comes to life insurances and doing things. And the Bible talks a lot about preparing for the future. It says, I believe somewhere in Proverbs where it says a person that's not prudent or doesn't, provide for his family's future is in provide for the danger ahead. It's almost like you're more, less than nothing because you're not taking care of the future of your family members and what's going on. So life insurance is very, very, very important. Like you say, for, building, support for your family in the future, for making sure that you're being good stewards over the finances that God has given us. So I'm still over here, y'all, upset because I don't want to say that the insurance companies are cheating people, but Monique, I feel like they are getting over on people and they know it. And I mean that's down to the car insurance.
Like life insurance, medical insurance, all of them. So.
I mean, and now that you say that it's something now that you understand I think we need to go ahead and dive off into this other one, because we need to know that it is something good about insurance, because I don't want to leave today without people understanding that it's something out there that's going to help take us to the next level that has to do with insurance. So let's get ready to go there.
Wait. Can I
Yeah.
get
Talk
into
to
something
me.
you just
Talk to
said?
me.
So, like you were saying, like auto insurance, life insurance, health insurance. Insurance, the concept, the idea, all of those years ago, only started because of the Chicago fire. Did you know that? So people didn't have insurance, of course. It literally didn't exist. And then the Chicago fire happens, and all those businesses and homes were literally burned to the ground. So insurance, that's how insurance got born. So insurance is never to make you better. It's to make you whole. So meaning you've paid $10,000 over 20 years that you've owned your house. I'm just coming up with, $2,000 a year for your home insurance. So you've spent $10,000. And then the unfortunate happens, the flood that happened here in our city. Nobody had flood insurance because we weren't in a floodplain.
Correct.
This was not supposed to happen, and people's homes and businesses were washed away. Insurance stepped in. So while we pay, nobody likes to pay $2,000 a year or $1,500 a year. If it's going to replace your $350,000 house because a tornado came through, because a flood came through, you need flood insurance for that, by the way, because a flood came through, have that insurance in place. It's a necessary evil. Somebody in my family that I love is a diabetic too, type 1. He does not make it if his dad does not keep him on life insurance, on health insurance. We could not afford it. Those, $400 worth of premiums and $30 worth of co-pays are nothing compared to the amount that the insurance company is paying to literally keep him alive. It's a necessary evil, which is why we have to be educated on it to make it work for us.
There you go, Monique. And that's, I'm so glad that you brought it back to a full circle, because we're not saying you don't have it, and we're not saying nothing negative towards insurance. We're saying do your homework now. Yes. Understand that it is other plans and other things out there that we're about to let you all know about in about 5 seconds. I'm getting excited, because when she talked to me about this, I was like, okay, this makes sense now. So we're gonna keep our insurance, girl. And I'm messing with you.
Most definitely. Yeah.
I'm over here joking, because we gotta have it, y'all. I'm a diabetic, and we gotta have insurance. So, and we just got a $18,000 roof with insurance. So we can't even talk bad about insurance. You gotta have it and understand it's necessary. So, Monique, I told you this thing was gonna go by fast. So I really, really want to get off into. We talked about term. We talked about whole. Do you think people got a good understanding, Monica, about term and whole? Do you have a good understanding?
Yes.
Monique, you got anything else you want to say about term and whole life before we dive off into this next situation?
No, I think we covered it.
You think we clear? You sure?
I do.
All right. Term life. The next one we're going to talk about, this was big when she said this to me, y'all, because I've heard about this for a long time. We're not saying that you want to take, insurance and use it for your greed or for you to get ahead and be greedy with what you're going to get, but you want to definitely do something that's going to help put some money or put the bag up for your future, for your kids, for the people that's coming behind you. And when she explained this thing to me, y'all, I was like, wow. At first I was like, Monique, is that real? I was like, girl, that don't even sound real. But when she broke it down, and I got this, y'all, we don't play, y'all. We bring people that's educated in what they're doing on our show. We don't just let people come on here and talk and don't know what they're talking about. So she's about to break down something to you all. Pay close attention. I ask you all to pay close attention and learn something tonight. So, Monique, this new insurance that you told me about that could open up avenues for a lot of people in their lives. Are you ready to talk about that one, girl?
I'm ready.
All right. I'm going to give you the table.
Okay.
All right.
So what Teddy is talking about is Index Universal Life. It is a life insurance product, and I'm going to break down each one of those terms so that it helps you understand my gift that I operate in is teaching. So I try to keep everything on as simple a level as possible so that even if you are out of a state that I write in, you can still take this information and go to another farmer's agent and say, I heard Monique Elam-Smith talk about this. Show me what you got. Okay, so what we're talking about is, I call it the Cadillac of life insurance.
The Cadillac of life insurance.
So y'all remember what Cadillac did, how it literally saved America's economy when Black people fell in love with that Cadillac, right? We literally saved this nation on more times than once. But the Index Universal Life Policy, indexed, it's tied to the S&P 500 or the S&P mark. So that's the index that it's tied to. Universal is where you can pay it like a term and still keep your policy, or pay it up, pay it in 7 years, pay it in 30 years, or go ahead and pay it whole life. Now, remember, there are uses for every one of these types of insurance policies. So you got to get what's going to work best for you. But why I call the Index Universal Life the Cadillac is because it hits it all. So, and then the life insurance portion of it. So how this works is, so not just in death, you can benefit in life with this product in particular. So I'm going to tell you that. You got a question before
I don't have a question. I just want to make sure everyone is hearing what you're saying. You said with this policy, you can benefit in death and in life as you're living with this policy, correct?
Correct.
All right. I just want to make sure they hear this now. Yeah, come on.
Correct. Those are living benefits. So the way these policies can be designed is, so you're putting in this money, which is, again, the cash value, right? Well, with an Index Universal Life, you're going to have guarantees that are going to be better than just a regular whole life, because you're tying it to the S&P 500 or the S&P mark, or both. So the design can be that you are maximizing the fixed rate of return for the money that you're going to be growing into your cash value, your asset, because this is your asset. And you said new. This is not new. Not at all. This has been around since the 70s.
Wow.
And in other versions of this, before the 70s. So everybody's heard of the Rockefellers. Everybody's heard of the Vanderbilts. Everybody's heard of, what's this other big family? It wasn't Disney. Lord, how did I forget that? It's how Disney World got built.
Wow.
Through the living benefits of life insurance. Why you think?
Oh my goodness.
Why you think we didn't know that? Why you think that kind of information was held to a certain number of people, a certain type of people? Y'all, I'm convinced this is not going to end in this is going to end in a haves and haves not. And I'm trying to make sure everybody that I come into contact with and that can reach is on the have side.
Wow.
Did you understand what she just said, baby?
Mm-hmm.
All right.
You can have your cake and ice cream too.
The Cadillac.
Basically. Yeah.
So basically with this UNL, IUL. I'm sorry, let me make sure I said it correctly. You can have a life insurance policy that's gonna actually be able to, as you pay into it later on, you can borrow from that.
Yes.
And use that to do what with? I mean, can you use it for
whatever you want? So here is where the good stuff gets in. So you can invest your money. Of course, everybody should be investing something. But remember, investment, when you are investing for your retirement, there are stipulations on it. I'm a financial services agent too, but there are stipulations on it. For instance, you're going to be penalized if you access it before you're 59 and a half, unless it's for, like a major purchase. And they're even trying to change that too. Major purchase like your house. So you have access to your money that you can either take a loan or withdraw. So 2 ways you can access it at any age, and as long as it leaves, like it literally will not allow you to deplete the death benefit. So remember, I was saying part of this money is going to go towards the investment, part of sub accounts, part of this money is going to go to the life insurance piece. So it still has to be a life insurance product, but you can still access that cash. So there are design strategies that, a one-on-one could happen. And you could say, I'll give you an example. So let's use you. Mm-hmm. So you are you are a diabetic. I don't know which type you are. Now, some companies can still write you, by the way, but some won't. So say you're at a company that won't write a diabetic. You can say you have a child or grandchild. I know y'all just have children now. So you've got a child and you say, okay, well, I'm going to make sure that my youngest or oldest has some form of life insurance protection, but also has a cash value benefit where I could access it. Whoever owns, and this is real inside right here, what I'm doing, whoever owns controls. So you would be the owner ensuring one of your children's, healthy and young and all of the things. But all that money that you use to spend on basketball and flag football and daycare and private school, and you got a lot of funds that's free now, right? Use that money to fully fund her life insurance policy. You continue to be the policy owner. Baby girl continues to live long, happy, healthy lives. And say you have an event that comes up in your life that you need access to this cash. It could be you want to open another barbershop. It could be you have a long-term health care event because you're a business owner. So I don't know if you have long-term care or not, but I'm just trying to give you ways that this pile of cash can go. You want to buy them a rental house, anything. That whoever owns the policy controls the cash.
So when you say whoever owns the policy controls the cash, that means that we can go and borrow. The owner of the policy can go and borrow. Now, one thing I want you to understand, let me say this real quick. You have to pay into the policy first. You can't think that you open up the policy and within a year's time you can borrow off of it and you have a lot to gain from. These are still things you have to go through the time period of letting it build and grow before
making
the money work. That's good, Monique. That's good. Making the money work. And that's something that you think about this. Y'all, I want y'all to hear me when I say this. This is investing in 2 or 3 areas at one time, you all. Hear me now, y'all. Investment in your death. That's crazy. You can invest in your death, your life, and also be your own bank. All in one.
All in one. It's the Cadillac of insurance.
That's crazy.
I was not playing. So just like that. And also with this product, this can go multiple ways. So as long as it's a direct line, so parent, child, grandchild, that's how you start it.
Okay.
So that is what I mean by legacy and leaving the generational, legit, leaving some real generational wealth. And that's why I use the example of, okay, you've got free day, not y'all's kids are way big, but you've got people that aren't paying, and I know because I used to have a daycare, that aren't paying $250 a week. You've got $1,000 free dollars that you were already paying. Put it in life insurance and let everybody be literally the family bank. So then that's where the trust comes in, right? So say the parent is the one that has the life insurance. Write that in. Say, okay, this is, by the way, you can even have this thing designed where you get both. So your beneficiary, say say you did this way. You did it with $1,000 a month. You put in $1,000 a month, and now it's like a huge stack of cash, right? In this death benefit. Some companies have it where you're only going to get, if you pass away, your beneficiaries only get the death benefit. Not mine. You can have it written to where you get both. Your beneficiaries will get both. So what the owner would then direct their family to do in their will or their trust is either put the money now, invest it in something that's going to draw a smaller amount, but let that stay the nest egg so that that death benefit stays there in the family, and the family is now earning income, letting the money work, and drawing income, paying, buy a rental property now. So do you see how this can become the family bank and it stays in the family forever?
Now, are you understanding, baby?
Yeah, I understand.
If you go ahead.
Real quick, so is that policy very expensive?
So it depends. This is where I don't even want to call it a downside. Just another thing to consider. Who's the healthiest? Health matters. Because remember, that $100 that you're putting in as the example, do you want 80 of it to go to the death benefit, or do you want 20 of it to go to the death benefit? So the healthier this person is, the younger this person is, the smaller amount
needs to go towards the death penalty. And then
now the insurance company is going to, break the math down.
Right.
Because they can't be, there are limits to their benefit too. They can't, be out here just taking stuff, right? Excuse me. So, and all of this is printed out too. Like when you get your policy delivered to you, there are illustrations in there. That is your in writing. Here's where I'm supposed to be at year 10. Here's where I'm supposed to be at year 20, on and on and on like that, right? So it depends on who the insured is, their age, their health, things like that, and how much you are putting in. So, like I said, all of this is, written out, spelled out. I can email you an illustration today.
So I'm gonna use. I want to do an example. Will we use me, or do you want to use one of my kids? How would you want to?
So I've got, who is this? I'm trying to see. I can give you any example, but I've got a 25-year-old female.
Okay, let's do that.
Okay. So I've got a 25-year-old female, and the monthly premium that she is paying is a number $75 a month. So that's a small amount, but she's also young, right? So this 25-year-old, and that's, be thinking of your daughter, your granddaughter, your you, because 25, you're probably listening to this radio show. And if I go in there and put you in an IUL and you're in, just standard health, you don't smoke, and you're in standard smoke tobacco, and you're in standard health. So that would give you a death benefit to start out at $100,000. And that's another thing I want to say. When I am creating these illustrations, you want to, if your goal for this life insurance policy is to accumulate a massive amount of cash value, then we want to have a small death benefit. If your goal is, you're a single mom like I was at that time, and you need a pile of money if you go home early, then you want to have more money going to the death benefit. So like I said, you can design whatever you want this money to do. So this young person, and $75, y'all, it was homecoming where we're from, and I spent 4 times that on a meal. We went out, we had a good time. It was a birthday, right? So I'm saying, I'm trying to just give you some numbers of, this is a small amount of money. This ain't, go and eat ramen noodles every day. This is no, structure what you're already doing and make it work for you so that when you get ready to own a business, when you get ready to buy your house, and I'm saying this to the young people, when you get ready to do the things that are really going to matter, did you buy a pair of shoes or did you make sure you got 20% of your down payment so you're not stuck paying PMI when you buy your first house? We got to think smarter, people. Okay, so that's why I gave this example for this 25-year-old. Okay.
$75 a month, correct?
Yes.
All right.
So $75 a month, but this young woman has a child and she needed the bigger life insurance piece. So that's why she's starting with $100,000 death benefit. But by the time she gets at 25, by the time she gets 50, so just double, she's sitting on $28,000. But her death benefit has also gone up. So as she aged, her death benefit age, she could have had more children. At this point, this one baby could be, going to college. So now we need more money for stuff, right? So you can have it where the death benefit goes up with you, or you can have where the death benefit stays level and more money is being pushed into your cash value. So by the time this young lady, and I had it set up where she stops paying at age 71. So normally we're going to retire at age 62 to 65, somewhere in there. But I want you to stop paying because I don't want anybody paying life insurance until they're 100 years old. So by the time she stops paying, she's sitting on $127,000 in her cash value. But remember, it has forced her death benefit to go up too. So should she be called home at this age, her beneficiary is going to get $354,000 because hers is designed to be increasing for the death benefit and so that they get both. Because again, she's got somebody she's trying to leave a bag to, right? Say she, again, hadn't paid anything to age 80. So now say she has a long-term care event. 3 out of 4, I think it's 1 out of 4. I'm sorry, y'all. 1 out of 4 of us is going to have a long-term care event before we go home, right? Well, say this young lady has a long-term care event when she's 80. She's got $227,000 to deal with it.
That's cash value.
That's cash value. While she's living, paying for her so she doesn't have to risk her house that she's bought now. That's why the IUL will grow with you. It'll hit everything you need.
So when you borrow from there, are you penalized when you take from your own money? Do you get penalized like you normally get penalized from taking from your Social Security? Or not so your 401ks and stuff.
Exactly. So no, because it's a life insurance product, you don't have those age restrictions. Exactly. So when you start this for your godson, you start this for your young person and they go to college at 18, you started this when they were born, grandparents.
That's it. Come on.
Favorite auntie, rich aunties. I know we love to brag about that now. But yeah, you the rich auntie, put some life insurance on that niece or nephew. When that baby goes to college, he or she is gonna be sitting on about $25,000. When he hits 30, he's gonna be sitting on about $100,000 or more. He wants to be a business owner. Give your nephew a $30,000 free business loan. The death benefit is still there. You still have cash value, and the cash value will continue to grow. Now, if you choose to borrow that money, you're paying depending on the company you're with, you're paying a 3 to 5% loan. So remember I said the amount of cash value is yours. You want to buy a house, you funded this thing well, grandparents with, lots of extra money. Now you're talking about $300,000 and $400,000 sitting in that cash value amount. What you look like? Now you are the family bank. See how credit is off the table? If you come through me, you're going to already have this 700 plus credit score because it is a must because you pay for everything less with better credit. But I'm saying, even if you miss the credit boat, right? Even if you don't want to deal with credit, put this money in this life insurance policy, and then you become the bank.
Ooh, boy. Y'all, I'm praying that you all, our listeners today, you all are understanding what is being said today. Like we say to y'all, this thing goes by fast, and this is really, it blew my mind when she first told me about this. And Monica, how do you feel about hearing this right now?
I mean, it's educational. I do want to look into it and get with Monique and look at the policies that we have and make sure we're making a smart decision, even at our age.
Yeah.
And then if then I can put my two young ones on what you're speaking about, because they're going to have families eventually, and children. So I think it's a great topic. A lot of nuggets in this topic, and I just thank you for sharing. Like they say, you gotta have wealth.
So what I want you to do real quick, Monique, give us all your information, because I really want people to know that we have someone that has her own insurance company, her own Black American owned insurance company. She cares about what's going on in the insurance industry. She's not out here. She's out here to help you all. We're going to put her information out there. We're going to put it on the podcast, and we're actually going to revisit this conversation again. This is not, we're going to set up where a lot of more people can hear about this, Monique. Me and Monica are going to really get off into this situation ourselves. We're going to do our homework, and I pray that everyone out there does their homework. But give us all your information, your contact information, everything, because like I say, we at the end, and it went by too fast for me anyway. But Monique, give us the information so people can listen to this, y'all, because this is the Cadillac of insurances, y'all. Y'all better understand, y'all. We just gave y'all a nugget today. So Monique, give us your information and let us know how we can, get to you, contact you, and anything else you want to share with us before we get off this air on tonight, Monique.
Thank you. Thank you for the opportunity. Really, I can't do this without more people that want to hear about it and have platforms that I can reach out to people and share this with. So thank you for that. My company is Elam-Smith Agency. My physical location is in Nashville, Tennessee, but I'm licensed in Georgia, Texas, Wyoming, Indiana, South Carolina. I'm missing a state. Tennessee. I might have missed a state. So, but I can be reached by email at tsmith15@farmersagent.com. That's T like tomato, Smith like my last name, SMITH, 15@farmersagent.com. And then I can be reached by phone at 615-818-1911 or 615-797-1912.
Okay.
One other thing before we get off the air, you also have other products as well. Couple of investment products you told me about. What are those? A couple of those things.
So yes, as I said, I'm a financial services agency as well. So if you are looking to, if you're one of these furloughed or laid off people, roll the money. Let's look at and see, what are your options to, again, make it work for you, in particular in this time, in this season. But yeah, like 529s, it's just so many ways for us to make our money work for you. We can design anything. I just need to know your goal and your timeline.
Goal and timeline. Y'all, we have given you all Monique's information. We have special people that can make it happen for you, that can get you that Cadillac insurance that you need, that can get you different investments that you need. You all, don't be a product of ignorance, you all. Please don't be a product of ignorance. We have so many things and so many revenues and resources out here that can actually take us to the next level. Now, I've been living 53 years, and I just heard about this particular insurance that lets you know that we do not do our homework. And I'm not downing us, but I'm saying we got to wake up. We got to get on board on what's going on and build wealth for our future and for our children, and it can be done. So, Monique, it's been a pleasure having you on today. I knew this time was going to go by fast, and I knew it was going to be a special show. We will be doing our homework. I told you I wanted to get you on the show before we start really diving into this thing, and we're going to make it to where we got to get you back. We got to get you back and talk about this more. I want this to be a topic that we put in the forefront for people to understand that it's ways out there, y'all, that a lot of you all don't know, but now we have access. Access is key. So y'all be blessed out there tonight. Y'all have been listening to WFTB 104.1 FM, Tab Nashville Gospel Radio, also being recorded Sacrificial Conversations. Monique, it's been a pleasure tonight. I pray that the listeners out there really take heed to what you heard on the night, y'all, and let's go get that bag. I don't want to sound like that, y'all, but seriously, y'all, build a future for your family. Make sure that if you leave this place, you have something set aside for your future, for your kids, for your children. Also, we can also be the bank. I'm gonna stop right there. We can be the bank.
Yes.
That right there alone says a lot. So y'all be blessed out there. We love y'all. Have a blessed night. I told y'all it was going to be a good conversation, sacrificial conversations. Did you subscribe yet? Hit that like button. You might get something that's going to help your life. Y'all be blessed.